What's going on, guys? It's Jimmy here. So the Federal Reserve and Jerome Powell, the head of the Federal Reserve, just made an absolutely amazing, huge announcement here that is going to affect pretty much everybody here in the United States. And I'm going to give you guys the information here in this video. I'll actually let you hear directly from Jerome Powell, the head of the Fed, the Federal Reserve, here in this video. Also, the housing market has had an absolute crazy reaction here, and I'll let you see what is happening in the housing market. If you own a home, if you're looking to buy a home, or even if you're a renter, this is absolutely crazy what is happening here. And we're going to go over all that here right now in this video. So let's jump right in. We are live right now here on the YouTube It's Jimmy Show. Let me know if you can see and hear me. Type yes in the chat. Let me know where you're tuning in from. You can let me know your city, state, or even your country, as we have people tuning in here from all around the globe. Don't forget to hit that like button for me here. And if you haven't yet, subscribe down below so you don't miss out on future videos. I will keep you up to date here with everything going on here on a daily basis that you need to know about. All right, take a listen here to Jerome Powell, the head of the Fed, the Federal Reserve here, on his speech he just made, and then we'll go over what this means for pretty much everybody here in the country and the reaction to this and what has happened here and how this is going to affect your money. Take a listen here.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet.
So what does all this mean, and what just happened because of this? Fed cuts interest rate for the first time this year amid weakening labor market. The Fed's rate cut comes amid weakening labor market data despite elevated inflation. Wow. You can see here, Fed approves quarter-point interest rate cut and sees 2 more coming this year before 2026, which is pretty good news. And we have a lot already happening because of all of this. Now, what will this interest rate cut mean for your home, your car, your credit cards? In addition, your bank accounts, your loans, your credit cards, and your investments. Well, we are already starting to see mortgage rates tumble, marking the largest weekly drop in a year. And this was largely before the actual announcement by the Fed. Mortgage rates tumbled this week, posting the largest weekly drop in the past year, mortgage buyer Freddie Mac said on Thursday, and they continued to drop all the way until today. Freddie Mac's latest primary mortgage market survey released on Thursday showed the average rate of the benchmark 30-year fixed mortgage rate fell to 6.35% from last week's reading of 6.5%, a drop of 0.15% basically in the last week or so before the actual Fed announcement of lowering interest rates. Freddie Mac's chief economist said, quote, mortgage rates are headed in the right directions and homebuyers have noticed as purchase applications reached the highest year-over-year growth rate in more than 4 years. Wow. This comes as the Treasury Secretary Bessent says that fixing housing affordability crisis will be one of their biggest projects this fall, as only 28% of U.S. homes are now affordable for the typical American household as buying power drops. Yikes. Now, lower interest rates will help lower payments on homes, on home refinances, on car buying, car refinancing, car leases, credit card rates, personal loans, bank loans, pretty much anything that has to do with borrowing. So this is a good news. This is the first rate drop this year, and the Fed says that they're on path to do 2 more this year alone, which seems like it's a good direction for the majority of Americans. Where this won't be a good direction for is for people that have money in CDs, people that have money in money markets, which is basically kind of like an online savings accounts that pay more than savings accounts. They're called money market accounts, which are still paying 4% or so at Vanguard and other online accounts. Those will start to drift down because interest rates are going to start going down. So for investors will get a little bit less money on their cash, but people paying interest on their loans, car loans, home loans, even credit cards. Remember, credit cards is you borrowing money from the bank, we will start to see those interest rates start to drift down. And the more and more interest rate cuts we see, the more and more those will start to go down even more, which is good news for hundreds of millions of Americans. And it's good news for the federal government, which is paying around $1 trillion per year in interest alone. Just in interest, $1 trillion per year the federal government is paying. This is a hole that the federal government and Congress has dug us into by overspending for many, many years. And that continues to get bigger and bigger as governments, whether it's in the U.S. here, whether it's led by Democrats or Republicans, continue to pay and spend and spend and spend. And as you can see here, the U.S. national debt is up to about $37.5 trillion. Debt per U.S. taxpayer is actually around $325,000. Wow. That is unbelievable. Also, I wanted to let you know that according to the Medicare Trustees Report, the projected Medicare Part B premium increase is projected to go up to $206.50, an increase of over $21 or around 11%. This impacts seniors on original Medicare and Medicare Advantage plans. Also, according to the Wall Street Journal, Medicare Part D prescription drug plans are also expected to increase for 2026 as well. Now, the Medicare annual enrollment plan is coming up, and this means that everybody on Medicare has an opportunity to change their plan for 2026, and we know that there has been a lot of changes going on. So I will put a phone number on the screen here to call Chapter Medicare, who I highly recommend. They have helped so many of our viewers here. And I'll put a link down below in the pinned comment so you can check them out online if you prefer instead of calling them. As with these 2026 changes, you're definitely going to want to know about them and see if you're in the best plan and you're getting the best benefits, whether you're on Medicare or Medicare Advantage or Part D. So call Chapter to schedule an appointment now because they tend to get busy and you want to make sure that you're on the right plan, whether it's for you or a loved one, because you definitely don't want to be caught on the wrong plan coming up for 2026. So share this video with anybody that needs to hear this information. Don't forget to like and subscribe down below so you don't miss out on future videos. I will keep you up to date with everything you need to know about. Click here to see Trump's huge announcement he just made. Thanks for watching, guys, and I will see you in the next